this ICDM's final Power Talk series for 2021, we aim to ask some of the tough questions and look to 2022 to see what opportunities it may bring. But before we really start in earnest, please permit me to repeat some housekeeping. As you'll notice, your mic is muted, but don't worry, there are ways of contacting us, because on the Zoom tab, which you should be very familiar with by now, there's a Q&A tab, there's a chat tab. Questions for our wonderful, wonderful speakers go into the Q&A tab. We'll answer them at the end of the session in basically in our dialogue. Well, if you have any technical difficulties or questions, please feel free to drop us a chat. This entire session is recorded. We'll send you a copy after. And if you wish to leave the session, you can, but you will rejoin it. You can rejoin it if it is still in progress. With that out of the way, as we mentioned, today's topic is your biggest S in ESG, sustainable human capital management, and workplace transformation. Of course, the big buzzword, or letters, as this case may be, is ESG, an issue that all boards, no matter where you are in the country, where you are in the world, are now trying to deal with. And while some may be tempted to treat it as a fad, the fact is boards only can do so at their own peril. Now, the ESG concept, the human capital management and wellness, is, I think people will call it a bit newer, but it is no less essential, because as many companies have said very obviously, their power and their advantages are always in their people. And ESG has been proven to impact business sustainability and productivity in the longer term. And of course, it must be something that boards have to think about as a permanent part of their agenda going forward. Today, to give their insight, we have Jeff Higgins, who's founder and CEO of Human Capital Institute, and Anwar Rozan, Managing Partner and CEO of HCMI, Southeast Asia and Pacific. We also have Raquel Focadi, CEO of XYZ at Work. But first up, the two gentlemen. Just a little bit background on both of them. Jeff is a global thought leader with 25 years of combined workforce planning, analytics, and finance experience supporting Fortune 500 companies. He's helped organizations around the world quantify the ROI of workforce decisions and realized cost-saving opportunities to up to $1 billion USD. Now, as for Anwar, he has more than 35 years of experience in telecommunications, oil and gas, automotive, covering a huge range of roles from marketing and sales to logistics and planning and transformation, as well as HR. He's also held a lot of management positions at C-suite levels in companies. So the two gentlemen aim to have us understand why human capital management and wellness is quite so important. Now, if you joined us in our Power Talk yesterday, it came up as well. And as well, the important thing, it's linked to productivity and ultimately, for a lot of us, the bottom line. So gentlemen, I hand it over to you. Are we good? Yeah.
I think we're good. I'm just waiting for my colleague Anwar.
Yeah, no worries, no worries. Yeah, I think he's just started screen sharing. I am very, very curious to have you, because I think quantifying this is probably one of the hardest things that is in your job. And I would love to hear it.
It is indeed. There we go. Thank you. Full screen. Okay, why don't we go to the next page? There we go. Navigating the complex ESG agenda. So interesting statistic, fun fact, 54% of ASEAN boards will be focusing on sustainability and ESG matters for the coming years. And the issue is last year it was the environment. This year it's more of the S and the G, the social and the governance. Possibly returning to environment again in the very near future. And of course, our focus is to talk about the big S, social, which is human capital or people, if you will, analytics, talent. All of these things come together in terms of how they impact an organization, its value, its brand, its ability to execute on what it does. But also, I would like to say there's also a connection to governance, because ultimately governance is about risk management and also governance of management itself, which is essentially how well do employees, how well do managers manage the workforce or the employees. Everyone knows, because there's a lot of good reporting on the finances, but what most organizations, particularly investors, are less clear on is, what about the talent, the people? Is that being managed on a long-term sustainable basis, or more of a short-term basis to try to maximize the value now at any cost for the future? I see Anwar's here. Anwar, any comments you wish to add?
Well, I think the on the S side, basically, what I want to say is all those things that we've covered, like human capital management, diversity, health and safety, human rights, value chain, society. These are all things that can be measured within an organization somewhat, and it's important for us to know basically where we are as far as all these metrics are concerned, and where is it that we want to aim for and to go towards, so that we can achieve the transformation that we want. And I think your next one of your next slides will explain the interrelationship between all the human capital metrics and the S that we've listed there, like human capital management, to the overall transformation model.
So next slide.
Okay, and I think this is it. I mean, this is a model that's borrowed from Mercer, but effectively, what is that everything in an organization starts with, okay, what is your purpose, and from there you've got your mission, your strategy, and then what you're aiming for is the outcome. It's all about productivity, efficiency, and of course revenue generation. But in between that, all these things will require us being attended to by your own workforce. And therefore, elements like the culture of the organization, the strategy that you employ, the leadership practices, the trust that we will be talking about between the leaders and the people, and also sustainability, so that the turnover within the organization isn't so high. And then you're developing people so that they can sustain their competitive edge in a very competitive environment and improve operational efficiencies. That's the only way that you're going to turn an organization from being mediocre to very, very successful, I guess. So the people side is the biggest differentiator in people. In my own experience, working with many organizations, for instance, many of those organizations actually have the money and the funds to acquire the best assets, to come up with the best processes, and so on and so forth. The differentiator is always the people within the organization and how that's run. And what we are seeing here is for sustainability of the company, it is actually the interventions that you need to do with the people that it becomes important. Over to you, Jeff.
Yeah, I would add to that. You can see purpose is actually the smallest of the concentric, I guess, ovals or rings. And what a lot of employees want now today joining organizations is purpose. They want to know that not only are they going to have a job, but that the organization has a purpose, and meaning it's creating some value. It's part of the solution from an ESG standpoint as opposed to part of the problem. And that influences culture. And you can see that, then it expands to strategy, leadership, and people practices, which, by the way, I would say is both S and G. And then people sustainability, which is your ability to attract and retain good people. But perhaps even more important than trying to keep your turnover down is what if you do a terrible job of attracting people, so you attract a lot of mediocre and they never leave? That's much worse than not being able to or having a bit higher turnover, because, by the way, sometimes turnover actually gives you an opportunity to refresh the workforce, to build more talent, to grow the talent internally. You can actually have part of your strategy be to let people get taken away by competitors occasionally, because you have successors already in place, and that keeps the culture fast and also creates opportunities for all those in the more junior roles who are looking for long-term growth. Why don't we go to the next slide? So you can see here on the first, which is you look at it from 1999, I guess, when you look back in the past more than 20 years, it's hard not to smile at this. Is that I'm not sure how for the top Fortune 500, which is a U.S. exchange list dominated list, but it also has many multinationals from around the world. Some of the largest included that Ford and General Motors were at the top of the sustainability list. A bit surprising in 1999, but probably they were doing something as opposed to many others who were doing little or nothing. If you look back in the past, fast forward, why don't we bring up the newer list? There we go. Quite a bit has changed. There are still a few players on there, and you could still perhaps smile a bit at a couple of them. The oil and gas companies, makes you question how sincere are their interests in reality. But that many of them are moving toward being carbon neutral from the environment standpoint, and many of them have had advanced human capital or talent practices for decades. But if you look at the change, some of the top players have been there for a while, but there's also some new ones that have come up that are much more healthcare oriented. In fact, you see a lot more healthcare oriented organizations toward the bottom of the list. CVS Health, United Health Group. McKesson is actually pharmaceuticals, and AmerisourceBergen is also pharmaceuticals related. So a lot of change has happened in terms of sustainability, in terms of how these organizations are scored on their sustainability. Why don't we go to the next slide?
I think, Jeff, I just want to say, I mean, from the previous chart before, basically what, I mean, there's so much changes now. Actually, Apple, for instance, highlight the people impact on the organization. It is now on its way to being the largest company in the world, the valuation of 3 trillion, which is huge. So this one company alone is worth 3 trillion. And what makes Apple? It is, of course, the people within Apple, versus just the assets. So the thinking, the innovation, and so on and so forth. Yeah, and that's how things are changing, I guess. With these high tech companies now.
I completely agree, and I'm a bit surprised that companies like Microsoft are not on the list yet, because also with the more than 1 trillion in valuation. So for many directors, you might actually consider some of the ESG as both offensive and defensive. You want to have the high ground in terms of being able to show and say that you're doing the right things, but it also impacts valuation. Those that are doing better and are scored or recognized as doing more from an ESG standpoint, it shows up in their valuation, whereas those who don't, it probably shows up on the other side, which is a negative impact on their valuation and their overall market value. Not to mention, there's a lack of clarity, which now we're going to talk about for a moment, about the human capital. So remember, we were talking about the big S in ESG. Well, so let's talk for a moment about human capital. So human capital, talent, people, if you will, the workforce is the most valuable asset in most organizations today. If you go back to 1975, you can see that the majority of the value of a company is kind of the white bar in the large stacked bars and kind of the top part of the chart there was what's called tangible assets. The yellow or golden piece was intangible. You can see it was this relatively small piece in 1975. Well, that's been changing. Fast forward to 2015, 2020, and now it's completely flipped. In fact, it's even gone over more so. So now 90% of the market value, and this is a Standard & Poor's, a global index of companies, again, mostly multinationals, 90% of their market value cannot be explained by tangible assets that exist on their books. Only 10% can be explained by that. So where does this intangible value come from? Well, you can see in the boxes on the far left, tangible versus intangible. Well, it's things like brand, it's data, it's relationships, it's your service, your employee and your customer experience, it's your intellectual property, it's your methodology, it's even in your process. By the way, all of those are a direct derivative of something created by people. So we like to think of this as either directly related to the employees who are there now, or those who were there before, who perhaps built some of the intellectual property and other things such as the processes and some of the brand value. But it's sustained, remember we're talking about ESG, by the employees and the workforce that's there now. So we really think that 90% is really unmeasurable, except as a human capital or an intangible value and creation. And of course, every CEO and most board members would acknowledge people are our most valuable asset, our source of value creation, our differentiator in the market. Well, we have a problem, which is that most data around information around the workforce is not being well reported or disclosed. There's not much transparency when it comes to people. Actually, most organizations today around the world, especially the larger multinationals and the well-established players in each country, are reporting and disclosing more about their environmental impact and supply chain than they often are about their own employees and workforce. Anwar, your thoughts?
Yeah, and I think that's a big challenge. I mean, we are very good at looking outside of our own spheres as far as stakeholders are concerned. But I think acknowledging the work that is done by our people inside, and of course, also making sure that they are kept competitive, kept efficient, and they create the goodwill within the organization so that they will be willing to give a lot more for the organization. And that also ties in with the sense of purpose that we had in the previous chart, where now more and more employees would like to have a greater sense of purpose other than, for working a 9-to-5 job and also earning a salary at the end of the month. So the idea of working for a company that is somewhat doing some good, and hence, I guess, is why ESG has now come up in the forefront of businesses, and there are now, I guess, in the world, there are even things like carbon credits that are being talked about, and ETFs being formed on carbon credits, so that companies that actually pollute the world are actually required to acquire some of this carbon credit to offset some of the harms that they would have done, And it's interesting how the world is changing, isn't it, Jack?
Yes, it is. Things have changed quite a lot. There we go. So it's important to talk about, so to make this tangible, so I don't imagine there's too much that we've said so far that hasn't been said by someone else, but there are some solutions, some methods that one could follow, places to go to get more information, to make some significant changes going forward. And there's the global standard created by ISO, the International Organization for Global Standards, based out of Switzerland, which actually has what I would argue is, and I'm a former CFO in a prior career, generally accepted accounting principles for HR, for how to, basically, there's a new standard called ISO 30414, which is called Guidelines for People or Human Capital Measurement and Reporting. It's the beginning of a set of standards for how to adequately measure and report the workforce. And it's a global standard, so organizations around the world can adopt that. Remember, I said just previously, there's not a lot of transparency around talent, people, human capital inside companies. There's actually more about their environmental impact and their supply chain, so more of that outward instead of the inward looking. Well, investors really want to know, how well are you managing this most valuable asset that you have, your people, your talent, your human capital, your workforce. And so you have to get the reporting right, and that's where the standard can really help. And it's, by the way, relatively inexpensive, can be downloaded or purchased from any of the ISO sites. And each country that's a member, there are more than 150 countries that are a member of ISO, also have their own service offering to enable the purchase of this standard for organizations to use. You see on a recent copy of the CFO magazine talking about human capital's big reveal, which is an announcement by the U.S. Securities Exchange Commission, and additional announcements have been coming up in different securities commissions around the world, requiring greater disclosure of people, talent, and human capital. So if you're a board member and you're wondering, what should I be doing about this, or what should I be asking? You should be asking, what metrics is the organization measuring and reporting internally, and what metrics is the organization measuring and ready to disclose or be transparent about externally. And if you're not sure, this ISO standard is a great place to start because it actually recommends 23 metrics for external disclosure and about 60 metrics for internal reporting. So it's a great start for kind of what to measure and how to measure it and what to potentially disclose. For board members and organizations, because investors want to know, and if you don't volunteer it, they're probably going to write a letter asking for it going forward actually very quickly. Anwar, thoughts and comments?
Yeah, I think that that is something that we've never had actually in the workforce environment for human capital. I mean, having come from a manufacturing sort of organization and things like that, ISO 9002, 9001 has been prevalent for maybe 20 years. But for human capital, this is the first time, and I think it came up in towards the end of 2018, where for once we have a standard that we can try to report on that will make our report be comparable between one company and another. And of course, that's something what investors, stakeholders, and the public at large would like to know. You know, I mean, if we say people are our biggest assets, the question is, what is it that we are doing internally to develop our people and to make sure that they will be able to create a sustainable, profitable organization, isn't it, Jeff?
Absolutely, absolutely. Next slide, please. Okay, so I'm not going to read all of this. A little bit of a history lesson in how did we get here. And by the way, there's actually, I guess, the latest news. Many countries are evaluating. In fact, I was just informed that in Japan, they just passed, the Securities Commission there just passed a new rule very similar to what was passed recently in the US, requiring greater levels of analysis and disclosure and discussion around talent, people, and human capital, all meant to be the same thing, but called different names. And now the US Securities Exchange Commission is actually getting ready. It's probably going to be in January or February of next year instead of Q4 of this year, to require a specific set of metrics for all companies that list on US-based exchanges, about half of the global market value of public listed companies, to disclose a specific list of metrics. And so the time for, I guess, thoughtful study and analysis, what are we going to report, is soon to come to an end, as organizations are going to be effectively mandated to disclose if they list on any US exchange. And based on conversations with colleagues in Europe, South Africa, Australia, Japan, and a number of other countries, it looks like many other countries are soon to follow in this same set of steps. In fact, they're waiting to see exactly which metrics are going to be proposed to be required reporting and disclosure. It's going to be a huge change for human resources and a huge addition to the responsibilities for board members, because in addition to the financials, really, again, under this ESG and sustainability initiative and that purpose, part of the purpose is how well is management under the governance and social, so SNG, managing, growing, and investing in their talent. If you hire them, pay them the least possible, they just do just enough to get by, and then tell the market that the talent is amazing and great. Well, once you have to disclose more, it's going to be much harder to tell those stories. You're going to need to be able to back it up with specific numbers and metrics, just like the finances have been for decades. Next slide, please. So as you can see, there's actually a global group that's working. I think all of the names on this list were directly involved in the creation of the ISO 30414 standard. And there's a lot of, I guess, vision and commitment from that, because ISO itself doesn't market or advertise these standards. So we're actually just trying to raise awareness about the existence of this as a tool and a guide for organizations to use going forward to help them determine how to measure and what to measure and how to measure it, and what to report and how to report it going forward in this rapidly changing pandemic-driven environment that we're in. Next slide, please. So where does that leave us? From an educational standpoint, the ISO standard is a guideline. It's not a law. And by the way, all ISO standards are voluntary, although as Anwar, you well know, some standards like ISO 9000, they go from voluntary to essentially required because no one wants to have a manufacturing facility that's not ISO certified. It would be hard to get any work or keep the facility open. So it's also a set of standards of good practice for global comparability. And that, of course, is what investors want. It's also, if you're a board member, a risk mitigator. Why make up your own metric that could attract a lot of questions and perhaps even some risks to the business when you can use a global standard that actually is comparable across all companies and countries around the world. And then it's also organization specific. So it does enable different types of metric requirements for larger, medium, and smaller organizations. So of course, the largest organizations have the most metrics and most rules that they're supposed to follow. Anwar, any comments?
Yeah, I think it's critical that countries like Malaysia also start move towards adopting some of these standards because it allows you to compare to other countries really, and therefore it is a standard that is going to be less questioned, I guess, from outside.
Yeah, speaking of the Malaysian context.
Yeah, so well, I'll carry on for a bit here. I mean, one of the things that we find, some of the challenges that we have is sometimes in the local context, we think and we say that according to some reports that the companies that we have are doing good enough or well enough according to our standards. But then when we are sometimes challenged by well, people from other parts of the world, really. I mean, in terms of some of the standards, and it would be better if we were to have something that is very consistent, that is already proven and tracked. So one of the things that we've done in Malaysia is to just look at from a very high level perspective, and mostly from publicly available documents. So we didn't do a very specific deep dive into any one of these companies, but we looked at 76 companies to look at it and understand how they are coping with some of the, are they reporting some of these metrics that is prevalent in the ISO 30414. And it's not to say that Malaysian companies don't report any metrics, everybody does it, except that if you were to look at the annual reports of companies that on the workforce of sites, people report different things, and mostly initiatives that they've done for the preceding year and so on and so forth. There is less consistency on the workforce metrics, especially if you were to compare it against the financial numbers. Financial numbers are all there. And interestingly, I mean, what we found is within the ISO 30414 top areas, there are 11 different what they call topics or different areas to look at. And this is where earlier on you mentioned, Jeff, that there are about 23 external sort of metrics, and then maybe about up to nearly 60 internal looking metrics on workforce. So they've divided it into these 11 topics, and what we see is that looking at it from left to right on a sort of descending order, out of the 76 companies that we looked at from publicly available information as well. I mean, this is the caveat that I put in, is that workforce costs 100% of these companies report on here. And then as you go into diversity, because it's very topical here in Malaysia as well, 99%, so most of them. And workforce availability, i.e. the number of people in the organization, again, a very high percentage is being reported. And then as you move along, skills and capabilities, there's some mentions of skill development, organizational health and safety, again, moves down to 75% of the reports metrics such as this. And then moving on to recruitment, 58%, organizational culture, so the culture within the organization, whether the people are engaged. I mean, there's a lot of engagement surveys, for instance, that's being done. For instance, only about 18%. And we saw in the previous model that organizational culture is very, very key in an organization, and it's effectively working together, proactively, but also collaboratively within organization. Compliance and ethics is 11%. But what is worrying is this next three level here, because as we all know, leadership is really very important. Yeah, I mean, all these top companies, for instance. I mean, lately there's a lot of talk on Tesla, yeah, with Elon Musk, again, a company that is in excess of $1 trillion now, which very quickly has superseded some of the traditional. I mean, because I come from a car background as well. They've sort of overtaken the likes of General Motors and Ford over a fairly short time. And again, they don't call themselves a car company, but leadership is important because everybody looks at Elon Musk, everybody looks at Steve Zuckerberg as driving an organization, and also for countries as well. So on leadership, there's not so much that is being reported other than who's in management and also who are the board of directors. Yeah, and then succession planning, which is also very key. I've done. I know of many organizations here do have it, but perhaps they don't report it. The idea is to have maybe for a mission critical job up to 3 successors that can step into that job within the next 3 to 5 years, and not many companies have this. You know, hence, whenever a leader leaves or some of the top management leaves, then everybody's scrambling around to look who would be able to take over that place. Yeah, and all these things leads to productivity, you know, and that's where we come in. You know, nobody really look at how do you translate the workforce costs that everybody reports on into productivity, you know, from the people's side.
Yeah, Anwar, I have to laugh. So if you ask the CEO and the boards of most of these companies, they're going to list productivity as number one, and yet it's not disclosed. I'll give companies a break because I don't think they know that there's a great metric that can be used that measures universally workforce productivity and ROI, and involves workforce cost as well, which is very strongly disclosed on the positive. And also, by the way, if succession planning is only 8%, whose fault is that? Perhaps it's leadership with only 5% we don't have anyone ready. Well, why is no one ready? Well, because we're not investing in them enough. So lots of opportunity on that far right side, but there is some positive news, which is that of these 76 companies, many of them are actually leaders on a global scale in terms of reporting and disclosing across all 11 areas, or the average of the 11 areas. So many of the Malaysian GLCs and other larger companies are actually quite good at disclosing overall. Just we're kind of poking at one particular set of weak areas here on the far right. Next slide, please.
Yes, this is an extension of what we've done in the sort of Malaysian survey. And I mean, as far as compliance, you can see that as far as compliance, I mean, for the 55% and the 45% at the top there, about 20 companies and 29 companies respectively within the 76 companies. And then there are the companies that is at the low end, and the ones that are on both sides, you know, the superstars on the right hand side there, with one company being on top of the others here. I guess for board directors, I mean, knowing where your company is against the others would give you some idea of I guess where you are against some of the competition. And it might give you some direction as to how you move forward with that. And that's why we're saying that it's important for board members to drive this agenda, perhaps through the RAMCO committee or something like that. Isn't that right, Jeff?
Absolutely agree.
Okay, I think Jeff, another new development is this Workforce Investment Disclosure Act. And this is something that companies are required to disclose now on asset and people, and so that everyone knows about this. And Beth, maybe you can, because this is something that is already been fairly mandatory in the US. Maybe you can talk a little bit about this from experiential point of view. Yeah.
Yeah, just very quickly. So there's a bill that was passed called the Workforce Investment Disclosure Act that requires companies to disclose about 25 different metrics and to segment it. I think the most important part of that bill was it requires a lot of breakdown between different levels of job to give the level of transparency that investors want. And the Securities and Exchange Commission doesn't have to follow that, but they've actually already said they're going to use this as a bit of the blueprint for what they're coming out with in just a matter of a month or two. So we really think not only are these metrics going to be some new metrics going to be required for disclosure, which and actually that was very good data on the 11 different areas that will probably cover perhaps almost all of the 11 areas. Especially if they're trying to be comprehensive, but will probably require some kind of segmentation. So a separation between, management, executive, non-executive, or some other kinds of classifications of the workers to make it a little bit more valuable and insightful. And I know that seems scary for organizations, but so has been sustainability, so has been, other aspects of social and governance. And really, this is something investors desperately want to get. And it's not a matter of they're just going to dump shares of companies if they're not getting it. They just want to know what's the number. And then long term, are you improving it and what are you doing to improve it? So it's really just, is yours an organization that builds talent or one that consumes it? It's a bit of an exaggeration, but it's not untrue. Why don't we go to the next slide?
Yeah, I think we'll have to speed up now, Jeff. I mean, basically, what we recommend is at least for organizations to look at human capital ROI, which is the basically the productivity is key index there. Leadership trust index is also very, very key. So that means what we find is a lot of companies internally, they have to be that trust between the leadership, the senior managers and the people, so that everything is transparent. And that comes in with good performance reporting lines and so on and so forth, many different things there. And we can talk about the interventions that is required to achieve this, but once you've established where they are. And of course, we've already mentioned about successor coverage rate earlier. So these are some of the areas that we can look at, so that at the end of the day, data on its own is not so useful unless you act on it to move yourself to a better place. So that your organization becomes a lot more competitive and a lot more, I guess, sustainable in this very, very fast changing environment.
And for those of you on boards, that left metric, human capital ROI, is a workforce productivity metric. So if you want to help your organization get so to speak, on the board and get that zero up for the Malaysian Bursa companies, that's the metric to use, because it's basically measuring what's your return on workforce for every dollar, ringgit, euro, pound, Singapore dollar, you name it, that you invest in the workforce. Why don't we go to the next slide?
Yeah.
And this is part of, we are trying to leave with some very tangible takeaways, which are, some metrics you can use, tools like the ISO 30414. This is also a statement called the Human Capital Impact Statement. It's something that we don't have time for the whole history, but actually was pioneered and modeled for several years across a whole group of GLC companies, way back in 2010 through 12. So it's actually been validated across a lot of different industries. And you can see at the bottom, it measures your human capital ROI per FTE, or full-time equivalent worker. So it looks a bit like a financial statement, but it's really all about workforce and people. Why don't we go next slide? And leading corporations are already adopting this ISO 30414. Some of these metrics, like the workforce productivity, has actually been validated by Deutsche Bank's investment banking arm as having a stronger statistical relationship to market value and stock price than return on equity, which as a former finance person was quite shocking to hear. Next slide.
It's good to know that you can relate all this ESG activity to, at the end of the day, better financials. Yeah.
Essentially doing the right thing for your workforce typically has the best ROI. And so I know for senior management who is often feeling very pressured, feeling like they have to balance the employees and costs and returns, amazingly, there are metrics and there are ways to actually you can get better talent that costs less. You can also strategically invest more to get a huge return. By the way, just throwing out a number, we don't have time to get too deep. Many times the ROI of great investments in talent, when you kind of know, you have the analytics, you know what to invest in, 10 to 1. You're not going to get that anywhere else. So the ROI in human capital can be huge and can also help boost your market value and stock price. So it's sort of doing the right thing for employees, being transparent, and making strong strategic investments. If you know what to measure, you can better manage, has a massive ROI for the organizations.
I think we should. You've more or less covered this, Jeff. But here in Malaysia as well, I mean, this ESG is coming up, and I know Bursa and our Securities Commission have actually done a lot of workshops and awareness on ESG. But like you said, I mean, a lot of focus on the environmental and the governance side. We would like to see a lot more focus on the people side. I guess sometimes what ISO 30414 can help you with is knowing what it is to measure. And like you say, Jeff, I mean, what you measure, you can improve on, and what you improve on will give you better productivity. And I think that's it. Jeff, Nadia.
Thank you very much. Yeah, thank you very much, gentlemen, for all. It's like so much information to take in, but it's very, I suppose it's kind of heartening to see that you can sort of measure the intangible, so to speak. But we have questions, but we'll get to that at the end. But thank you very much for that. But now we have to move on to Raquel's session. And the topic today that she's tackling is multi-generational workforces. We'll talk about diversity on the boards all the time, but we're not just talking about gender. We're not just talking about experience. We are also talking about age, because I know for a lot of boards, they look at an age floor. But should that be the case? So during this session, Raquel will reveal everything you need to know about the challenges and opportunities in doing a multi-generational workforce, and how the boards can play a very critical part in helping organizations sort of tap into the full potential of their human capital. Raquel, the floor is yours.
Thank you so much. Let me share my screen with you guys. I know that we don't have a lot of time, and it's a lot of content, and I think really important one. I loved the presentation just now. Obviously, I've been a strong advocate of organizations growing and unleashing their full power through their human capital. So today I'm going to talk to you about why is it important to look at generational diversity, and why is being able to successfully lead and understand your multi-generational workforce key in order to build a thriving and sustainable organization. So I'm not going to talk too much about this. Obviously, this has been covered by the previous presenters very, very well, but we know it now. I mean, it's undoubtable. Every CEO out there now talks about how the greatest asset is the people. You don't build the business, you build the people, and the people build the business. And yet 80% of CEOs continue to be concerned about availability of key skills, where 40% of CEOs, and this number has increased in the last year, say that they're unable or barely able to hire the talent they need. So this is very much linked to why generational diversity is so important, because the demand for certain skills that are already in shortage will continue to surge, which means it will become more and more difficult for organizations to be able to attract the talent that they want. There's also shifting demographic trends, and one of these trends is the fact that you have an entire new generation entering the workforce. And of course, they come with their very own set of preferences and expectations, which very much links to the ESG topic. Also, baby boomers are working well past the age of retirement. So for the first time in history, you have 5 generations that are actually working alongside each other, which means organizations will need to be able to create the best possible environment for a vastly diverse group of people. But the other thing as well, and I think we've noticed this, is that, if the last couple of years have taught us anything, is that the challenges that we're we're facing cannot be solved, both, as businesses and also as society, cannot be solved through the traditional and hierarchical way of doing business. Organizations will increasingly need the vitality, creativity, idealism of the younger generations, paired and coupled with the knowledge, the experience, and the resilience of the older ones, if they are to be able to stay competitive and drive positive change. Now, the good thing is that, despite all the disruption from a multi-generational workforce perspective, COVID handed us a golden opportunity. So it forced us not only to further elevate the strategic importance of talent, but it forced us to realize that the future will require a much more calculated, flexible, and sensible approach to recruiting, employing, developing, reskilling, and upskilling people. And that for organizations, being able to combine the drive, the resilience, and the social mindedness of these new generation coming into the workforce with the institutional knowledge and the experience of senior employees will really be critical. It will actually mean the difference between merely surviving and prospering. And then, of course, being able to combine our strengths is the one way to ensure that we're going to be able to tackle all these interconnected problems that we are increasingly going to be facing as businesses and as society. And this is what actually led me to write my book, Reframing Generational Stereotypes, exactly to help employees and organizations understand more about each other and how they can actually embrace diversity and work together to drive positive change. Now, what that means from a leader perspective, and of course from a board perspective as well, is the fourth industrial revolution and generation change will call for a complete different type of leader that is very different from the leadership concept of the past. This is a leader that will have to be able to operate and excel in a digital world. It will have to be able to lead people in real life business situation by managing them, understanding them, adopting progressive management strategies. They're going to have to rethink their organization and how shift norms around office environments and how to organize those people. And then obviously how to capture the power of collective talent through innovation. And this is where the multi-generational workforce and collaborative decision-making really comes in. So future leaders will be expected to understand the needs and priorities of a wide range of generations in order to be able to operate effectively. So understanding the why that underpins employees will become more crucial to better engage and empower a generationally diverse workforce. Now, why this is also critical is because in a market where talent has the upper hand, where organizations are still struggling to win this war for talent that McKinsey has identified as a key strategic priority for companies years ago, you're going to have to be able to attract, to recruit, and then to retain people, because hiring them, identifying the best, getting them into your organization only to lose them because your environment does not cater to collaborative decision making, where people don't feel embraced by the existing workforce, and so on and so forth, will really be a pity. So if here's your multi-generational workforce. This is what the workforce is mostly looking like nowadays. Of course, we also have traditionalists who are going strong, people in their 70s, but those that are still in the workforce are very close to boomers in terms of age. So we will kind of bunch them together for the purpose of this presentation. But you have your baby boomers born, between 46 and 64, your Gen X, my generation, 65 to 1980, millennials from 1981 to 1995, and the new generations, 1996 to 2010. And these new generation, Gen Z, are the ones that are actually going to force you to rethink how you run your business and how you can actually align your mission and your vision to these sustainable goals that we've been talking about. Now, it's interesting for the family businesses out there, intergenerational collaboration is not just critical for large organizations, but actually is the key to family business succession. Intergenerational conflicts have been known to have devastating consequences on family-owned businesses. In some cases, even more than other organizations. I mean, we know how difficult relationships are. And if you add that, or family dynamics, and if you add that generational layer on top, you just add an additional layer of complexity. But we see that less than 1/3 are family SMP 60s compared to today. And it's interesting because I do a lot of sessions for family-owned businesses where I help them understand, how to bridge the generational divide so that the next gens can actually successfully take over the reins of the family businesses. And the reality is that there's an increasing number of next gens that are leaving the family business, mostly due to their inability to establish credibility with older family members and assert themselves. You have the next gen on one side who want to be more involved in key decision-making and align the company mission to causes they feel passionate about. And then on the other hand, you have the G1s or the parents who are concerned about next gen's ability to lead the business into the future. And many next gens say that most of their issues stem from this I know what I'm doing mentality that the older generations have, and their reluctance to trust what they cannot understand. But they feel, of course, that we cannot navigate today's challenges with the same tools and the same thinking that was successful many years before that. So, one thing that I wanted to talk about really briefly, and I thought I'd add this in this presentation because it's so relevant, is the impact that these new generations are going to have on the workplace. So if we think about, how talent has chosen organizations over time, when it was the time of the baby boomers, you would go to school if you were one of the few lucky ones, and you would choose an organization predominantly based on the industry or based on the actual opportunity. And then with Gen Z, Gen X, we became extremely brand conscious, right? This is the 80s, the time of advertising. We were the ones that would want to join an organization if it had a very strong brand. And then towards the end of the Gen X generation and the beginning of millennials, we started to realize that it doesn't really matter that you work for a very prestigious organization if the work that you do is menial, if you make photocopies and serve coffee all day long. And so, talent started thinking about their ideal employers predominantly based on the role. And then after that, of course, the millennials came up and they started demanding this workplace revolution where choosing the right employer was linked to the work environment and how friendly it was and how much it aligned to them and their own personality. And now this new generation, Gen Z, is going to drive a new wave of change, and it will be linked to purpose and impact. They will expect an entire new revolution, which is organizations being accountable for saving the world, pretty much. So it's interesting because it's important to understand this new generation because they will account for more than 40% of the workforce by 2030. And you won't be able to attract them and keep them in your organization if you do not align your company to your purpose and a mission that you can actually prove and demonstrate and own. This is a generation that feel a sense of urgency to fix what's broken. They don't believe in CSR. And this is the big difference with the millennials who actually did believe that if they worked for a company that had strong CSR commitments, then they were kind of playing their part in making the world a better place. This new generation that just thinks that CSR is, a huge tax deductible with big PR upsides. And so they don't think that that's a significant commitment on the part of companies to really change things. 60% say they want their future career to change the world for good. 66% want to start their own company. And in countries like Indonesia, that number goes up to 87% because they simply don't believe that they can change the world by working for your organization, which is really interesting because millennials wanted to start their own company to be their own boss and to be flexible. This is a generation that wants to start their own company because they feel a sense of urgency to save the world, and they think that doing it single-handedly is the way to go about it. But even those who choose the corporate sector want to work on projects that deliver fast and traceable impact. So the relevance in terms of multi-generational workforce is that these generations will come in full of ambition, full of vitality, full of need to change. And if they don't find an environment or older generations in the workplace that enable that change and empower them and slow them down, you're not going to be able to keep them. They really feel they're running out of time. Also, another reason why it's important that you understand this new generation and have, sustainable and ethical, practices is because this is a generation. I mean, I'm sure you all heard of ethical consumers, but they can literally bankrupt a company by not buying the company's products. 75% of the new generations are likely to buy products to show support for the issue that the brand supports. And likewise, 65% would stop buying products from a brand that doesn't share their same values. And we're seeing it now with a lot of big brands around the world, which are pretty pretty much being boycotted because this generation decides that the messages they're sending are not positive messages. I mean, even, Victoria's Secret, big woman, lingerie store in the, globally is now forced to change its advertising completely because the new generation say you're portraying an ideal of beauty that is not, that is not real, that is hurting my generation, that is forcing many teenagers into, not eating and mental health problems. And so we're going to stop buying your products. So even big brands that, had a very specific brand message were forced to change. So if you don't have an ethical people practice, if you are not aligned to a bigger mission, they will stop buying your products. You won't just lose them as talent, but you will also lose them as consumers. 91% say that their ability to drive social impact is important when they consider their future career, particularly to address inequality, education, poverty, sustainability, and climate change. And they are loyal to causes and principles and will only work with organizations that are aligned with their values. So this is a generation that will not shy away from asking, why should I join your company? What are your principles? And, what good am I going to do to the world by working for you as opposed to doing something else? And we see it in all, these incredible Gen Zers that are rising up around the world, from Black Lives Matters to school strikes for climate action to, the protests in Hong Kong to Malala, really rising up to address this. And they say commitment is what keeps my generation on track. The deeper our commitment to social causes, the higher the chance we will be extremely picky when it comes to our future employer, because we will want to evaluate every little detail. If we find anything against our ideology, we will not be applying. And then the other thing, of course, is for Gen Z, greenwashing will not do. This Gen Zer I spoke to told me it's naive to assume that any individual or conglomerate can avoid at least some form of social responsibility. I believe commitment to social causes to be an absolute necessity in order to sustain the right that and right the wrongs of the past generations have enabled. In this day and age, it is almost impossible to be apolitical unless you come from a background of extreme privilege. The personal is, after all, political. And as a result of that, as we just saw in the previous session, more and more organizations have started to redefine their mission, and many have successfully managed to align purpose and profit through sustainable profitability. An example is Patagonia. I said many years ago, Patagonia will become to the Gen Zers what Google was to the millennials. And in fact, when you go on their website, the first thing you see is we're in the business to save our home planet. And they mean it. I mean, they literally send camper vans around the United States so they can actually take clothes that are broken, Patagonia clothes that are damaged, and fix them on the spot for free. And of course, needless to say, the more Patagonia, fights consumerism, the more product it sells and the best talent it attracts. And then there's a lot of other organizations, of course, from Amazon to Unilever and many others that have aligned their business goals to sustainable goals. So now you understand why that's important, because this generation will come in and they will be expecting to drive change quickly. They feel they're running out of time. So it's important that there's understanding between the generations in the workforce for that change to enable. Diversity can be a great asset. We know that. It introduces fresh perspectives and applied knowledge. But if it's not handled with care, it creates a volatile environment that leads to obstacles in communication and conflicting expectation. And this is really what's happening now with many companies experiencing the XYZ divide syndrome, where generational diversity is seen as a negative element that makes the workplace less productive. If you see here, 59% of boomers, 66% of Gen X, but only 40% of millennials and Gen Z say that generational diversity makes the workplace more productive. And predominantly, it's about this constant struggle between new age thinking and traditional mindset. And then, as George Orwell said, every generation imagines itself to be more intelligent than the one that went before it, and wiser than the one that comes after it. And as a result, you now have this kind of okay boomer slang to dismiss the opinion of older generation that supposedly are out of touch with reality versus strawberry generation. The baby boomers rebuttal to a generation that didn't experience world wars or didn't experience hardship and hence are easily bruised, and what do they know? And of course, this is a pity because there's a lot of power in unity, especially going forward. So as a result of this, intergenerational conflicts are frequent. 44% of boomers, 55% of millennials, 48% of Gen X, and up to 70% of Gen Z say that intergenerational conflicts in the workplace are extremely frequent. And the reason for that is that Boomers say work ethics and career perspectives are so different, so much so that leaders across generation find them unsolvable. Gen X thinks that we don't know how to communicate effectively with each other and optimize our strengths. Millennial thinks there are too many ego clashes, with seniority often kicking in and reducing social cohesion. And of course, Gen Z say that there's too big of a difference between old school and new age thinking, where young people want to drive change and create a new path with positive, successful impact, but the old generations want to follow the old path. And as a result of all of this, as a result of all this misunderstanding, this is how generations experience each other very frequently in the workplace, where baby boomers are seen as hierarchical, as stubborn, as disrespectful, as conservative, change resistant, risk adverse, or lacking empathy. And you can see here Gen X, pragmatic, know-it-all, insensitive, individualistic, not authentic, skeptical. And millennials, unreliable, work detached, overconfident, entitled, disrespectful, and insubordinate. And the new generations, of course, impatient and inexperienced and easily bored, tech addicted, easily bruised, and so on and so forth. The interesting thing here, and I think this is particularly true to Asia, is you see that both the older generations and the millennials are accused of being disrespectful. So I went in to try and understand what disrespectful actually means. And it all stems in the definition of the word respect. So for example, for the baby boomer generation, respect means they expect deference. They want more weight given to their opinion. They want special treatment. And that's because, of the way that they grew up, with an authoritarian father. And when you are the leader, you punish, but it's for your own good. And you're expected to be looked upon and given more weight and more attention and more focus and more respect. Well, on the other hand, if we look at Gen Z, they don't know deference. If you think about how Gen Z are raised, they have a very different relationship with their fathers than baby boomers. It's much more of a flat interaction. So when they join the workforce and they meet someone who reminds them of their dad, they're likely to be very open and to tell things the way they think they are, and to be, very, very flat and very transparent in their communication. And very often baby boomers consider this as lack of respect, while to the new generation, this is respect in the making. I respect you enough to be honest with you, to not beat it around the bush, to treat you, to talk to you like an equal, like we're both in it together. So very often it's really just about understanding how we experience each other and how we actually explain or justify behavior that we don't understand. Now, the good thing is that we see many strengths in one another. 99% of employees across organization actually want to find a way to work with other age groups. And there's a lot of positive things we recognize in one another. Baby boomers are loyal, experienced, knowledgeable, hardworking, wise. They have a wealth of knowledge. Gen X, they're the ultimate problem solvers. They're adaptable, industrious, independent, versatile, sensible. The new generations, millennials, are creative, innovative, open-minded, social-minded, and balanced. And these new generation, Gen Z, they're idealists, they're impact-driven, they're fast learners, they're trendy, and they're hungry. And they really want to come in and they want to transform organizations and society. So obviously, this is a great opportunity for organizations and for boards. Another thing is generations want to learn from one another desperately. 97% say they can learn a lot from their multi-generational colleagues. The older generations want to learn about digital, technology, new age thinking, creative thinking, work-life balance, even care for the environment and how to act upon it. And the young generations are desperate to learn from baby boomer and Gen Xers how to negotiate, work ethics, leadership, strategic thinking, soft skills, politics, professional conduct. But they say that organizations just don't offer the opportunity to share this knowledge with one another. The other thing that I think is important to note is that every generation is equally intimidated by their role in a multi-generational workforce. 1 in 2 across generations admit to being intimidated by other generations. For your leader, baby boomer, whether it's a CEO or a top leader of an organization, they're worried about overcoming old mental models, about lacking technology or not learning as fast as the young generations. The Gen X are worried about staying relevant, about reaching a new age bracket and the bias attached to that, about being too old for the new generations and too young for executive management. The millennials are now worried about being sandwiched within generations or dealing with institutional power. And the new generations are worried about the fact that they will be stuck with limited opportunities doing menial work when in reality the future depends on them and they are running out of time. Now, the other thing that's relevant for you guys, and for everybody in the board is generational diversity should be on DI agendas. There's a lot of people out there that say generational diversity doesn't exist. We should stop talking about generations. We're all people. But the reality is that the context that shapes us matters. It does make us different, and differences make us stronger. And on the other hand, employees are obviously experiencing this in the workplace. By not addressing it, you're simply dismissing an experience they're having instead of actually acknowledging it and embracing this generational diversity. 89% of boomers, 87% of Gen X, 94% of millennials, and 96% of Gen Z say that generational diversity is super important and needs to be on every DI agenda, but less than 40% of employees say that their company is doing something about it. Less than 23% of HR say their organization is committed to it. And based on a recent Deloitte study, 70% of organizations say that addressing the challenges of a multi-generational workforce will be critical for the business in the next 2 years, but only 10% are ready to address that challenge. And the reason for that is they're scared. Leaders and HR professionals are worried about being misunderstood, being unable to bring everyone under one vision, alienating certain people, failing to ensure fairness, inability to accommodate different expectations. And as a result of that, the impact on organizations is huge. There's discord among workers, unhealthy competition, lack of teamwork, stagnated innovation, slow technology adoption, slow moving projects. And all this not only impacts your profitability, because engaged talent is more profitable, but also your ability to hire and retain the right talent, your ability to innovate and drive positive change, and your ability to build a strong employer brand that continues to attract the talent that you need. So there's a lot of success factors, a lot of things organizations can do to actually foster a culture of intergenerational collaboration, from ensuring cross-generational awareness to creating safe spaces where generations can just talk about one another, building emotional connections through joint activities, creating cross-generational learning opportunities, for example, two-way mentoring, where someone is at the same time a mentor and a mentee, or using collaborative decision-making, where you get a multi-generational team, you strip them of seniority, you put everybody on the same level, and you encourage them to work and rely on each other's expertise and skill sets as opposed to years of experience. And also, of course, advocate and practice lifelong learning, where it's not just the older generations that need to keep up to date and skill and upskill themselves, but even the young generations, because things are moving so quickly that we have no choice but all learn together. And then finally, in regards to boards, one practice that has been extremely successful and is being embraced by a lot of organizations is shadow boards. You have companies like Gucci or Accor or Beasley or Group M is doing an amazing job. More organizations are inserting young people into their boards in an effort to cover blind spots in decision making and to address the issue of disengaged young workers and weak responses to changing market conditions. So for example, Group M in India, they realized that if we want to attract the best and brightest, we need to expose them to leadership, and we want to make sure they work on things that matter. And at the same time, our boards are not really in contact with young consumers. So we can hit two birds with one stone, and they created a shadow board, which means an executive board of youth, of young talent that had been in the company for a year, that worked together with the executive committee on all projects of strategic importance to the business. And in the process, they taught each other things. For example, the YCOs mentored the executive committee on 2 different subjects every year so that each can learn from one another. So shadow boards are a group of non-executive employees who work with senior executives on strategic initiatives. And the purpose is to leverage the young group's insights and to diversify the perspective that executives are exposed to. So they use it for business model reinvention, process redesign, organizational transformation, and also increased visibility for young talent. So this is an example of how you can really combine the strengths of the young generations and the knowledge and experience of the older generation to drive the business into the future. And if we look at the innovation these companies were able to drive as a result of this collaborative effort, many of them, Siemens is one example, but in their talent acquisition function, they were able to drive 5 years worth of innovation in 1 year. So I know that I'm out of time, and this took a little bit longer than initially planned, but I would like to end with this quote. Global crises that crush existing orders and overturn long-held norms, especially extended large-scale wars, or in this case, a global pandemic, right, paved the way for new systems, structures, and values to emerge and take hold. Without such devastation to existing systems and practices, leaders and populations are generally resistant to major changes and to giving up some of the sovereignty to new organizations or rules. So I think, everything that we've seen in the world right now is obviously forcing us, number one, to recognize that we all need to play a part in making the world a better place and addressing all the societal challenges that we're seeing. And ASG is a great one. And the other thing as well is that while the world for the last 200-300 years has belonged to the older generations, and then for the years previous to that, to the young, our kings and queens were nothing more than teenagers, the future will be in the hand of both the young and the old generations working together. And if we can really embrace that, I do believe that we're in a much better place to solve many of these interconnected problems that we will be facing increasingly going forward. So thank you so much. This is all from me. I always happy to talk about this in more detail if you want to, and also happy to connect with you separately. You can also find a lot of insight and information in my recent book, Reframing Generational Stereotype, about how exactly you can work to build a culture of intergenerational collaboration and drive generational diversity throughout your organization.
Thank you very much for that, Rahele. I'm so sorry you had to sort of rush it through, but I know it was great though. It was fantastic, because I think that's a question probably everybody who's on the Zoom call now probably has had at one point. I can't talk to my younger/older colleagues, right? It is such a weird, because you guys see the universe in very different ways. It's like when you talk to somebody who's a lot younger and you realize their priorities are completely different from yours. All three of you have that for sure when it comes to like dealing with your colleagues. Yeah, everybody's like nodding there.
Yeah, I can't even talk to Jeff. And there's not much of an age gap there.
But I think that's the point, right? I think the point is that there's so little we understand about one another. 97% of employees actually say that they know very little or nothing at all about the forces and contexts that shape their multi-generational colleagues. So I think, understanding one another is just a very easy, simple first step at kind of eliminating some of that confirmation bias that we all hold against one another and work together more collaboratively.
I think that's something that has to start from all of us, because bias is bias for a reason. We are all biased because of our own kind of upbringing, and our priorities are kind of very different. I think we need to be understanding of each other, which is always like harder than it sounds.
I think,
right, Anwar?
Yeah, I think Raquel, it's such an interesting challenge, and it will be so wonderful if we can sort of bridge the gap and move towards solving it. And I can tell you, from people in my generation, for instance, your descriptors are exactly right, and the idea is, and sometimes we just give, how do you say that? We give sort of face value to the concerns and the views of the Gen Z and Gen Y, without really being engaged in it.
I agree. And I think there's a lot that the new generations don't know. Baby boomers were the first to drive, big change in society. So it's really sad when the new generations feel that baby boomers don't want them, or the old generation don't want them to drive change. And then you talk to baby boomers and they say, the young seem to think that we have a problem with them wanting to change the world. On the contrary, their aim is good. It's just that they don't have all the skills needed to drive that change. And there's value in experience. And if we can actually share and they can value our experiential input, we can help them turn those ideals into reality, because we know where the bottlenecks are. We have knowledge and information that can help them actually drive this agenda forward. And it's so sad that they think we don't want to drive that change. We do. We just want to be able to help them understand that there's tools in their toolbox that they still don't have, and we can help by providing. And I think that's very powerful, because there's equal commitment, I think, towards ESG, for example. A lot of the leaders that are driving such incredible transformation nowadays are boomers. So
for sure. at least they recognize their role in that for sure. We've got a few more minutes for questions. I'm going to try as many as I can because everybody's been so engaged this entire morning. We were talking about disclosure, and this actually struck me, right? The often quoted reasons why disclosure is related to human capital is that it's one of the company's most valuable assets. Disclosure apparently undermines confidentiality and competitive advantage. Where should the balance be struck? I think this is for Jeff for sure. Where is that balance between showing, showing enough clarity, but not showing your entire hand?
Right. Well, and I don't think any of the metrics that are going to be coming out are going to require disclosure of secrets, trade secrets, or anything like that. And I know management, and by the way, and a number of companies have used that a little bit, perhaps too frequently. I mean, is there some secret? So, I mean, say, oh, we're unique. We don't want to just, share our structure of our organization between, just a few categories, right? We're not asking how many accountants do you have, how many attorneys, and every organization is truly unique. But you know what? We all get our talent from the same places, the same pools of talent. So unless you have invented an alternative universe or found a pathway to an alternative universe to hire people from some totally unheard of place, who knows? Maybe that's possible. There's really nothing all that secret in your talent, and no one is asking you to disclose it in such detail that it would really give away competitive advantage. Investors, on the other hand, have the opposite. So you're telling me your people are your most valuable asset, and you're telling me almost nothing about them. Not fair, right? So I want to know that you're investing in this pool of talent, and you're kind of doing the right things, because there's actually a famous game company in the US, Activision Blizzard,
Yes.
which is currently being investigated by the Securities Commission. They've had a whole series of scandals across the summer and fall. And not only did they, in their public financial statements and their reporting on human capital, say, oh, nothing material, nothing significant's going wrong. Come to find out, in fact, they actually knew a lot of things were going wrong behind the scenes, and they didn't disclose. So they're in a lot of trouble for having said one thing when something else entirely different was going on behind the scenes. So it's really just and that's a bit of an exaggerated example. I'm sure most companies don't do anything like that, but you need to be true. If you say everything is good, oh, our people love working for us, we train them, we develop them, it's all about the employees, when in fact you pay low, you invest nothing in training, and all too many of your top performers leave, you might need to change your story a little bit. Most companies do a much better job, though.
Yeah, for sure. Activision and gaming in general has a whole history, but that's also another topic that you and I will talk about for another time, because that industry in general had a lot of issues of that anyway to begin with.
Yes.
Yeah, but they're being investigated for that. Okay, the one thing I want, of course, we all talked about ESG. We talked about the importance of it. So Julie Leong is asking, more companies are getting more open to ESG because, of course, ignore it at your own peril, right? But is it difficult to come to a framework or a standard governing when companies are different, industries are different? There is no one size fits all, but at least can we all sort of get into a common ground? Is it possible, or am I talking too much, hoping too much? That at least there's a basic framework that we can all adhere to, because you were talking about carbon credits, right? Some can, some can't. That's another aspect of it. So which of you three want to answer that about ESG? Anwar?
I think that's a very good point. There's a lot of things going on out there, carbon credits and things that are changing. I guess things that are coming out now, and so I mean.
Yeah, is there one? Do you think there is going to be a global framework? Do we think we can all finally agree on one?
I think we should have. I mean, as Jeff mentioned, I mean, with the ISO standards as well, we've got 23 different metrics to share with people outside, and 60 something which is for yourself inside. So within that, I'm sure. I mean, what we did in our short studies, look at the 11 different topics. So across those 11 topics, there could possibly be something that is that you can pick up, that can be applied across across the companies without divulging too much of your soft secrets or secrets. I mean, I've come from an organization, for instance, and we don't publish our org structure and things like that very much, because we're always afraid that people will poach our talents, our C-suites and their succession plan. However, it's a bit of a challenge now because all the information is available on LinkedIn, and sometimes people from outside knows more about your people than the organization themselves do, because they don't look at it, because these guys are probably looking for jobs outside. So the interface is there. So it's always better to know what challenges, where you are, how you stack up against the norm, because otherwise you'll be thinking that you're up there in the top quartile when actually you're in the bottom quartile, because macam Melayu kata shock sendiri je kan. So
you believe in your own you believe your own hype, I think is the term. We have time for one more question before we sort of wrap up. I'm so sorry, but yeah, I mean, it's just so fascinating, right? Because when you talk about the human nature, the human problem, it's always fascinating. I want this question from Grace Yap, and it's for Raquel about better understanding differences in generation views. Of course, you said engagement, communication, not being scared of each other, apparently. How would you advise in calculating this in traditional, conventional PLC family companies, which do not have like generational diversity for strategic leadership? It's essentially trying to understand the dynamics in your own family on top of it being a business. So how would you do that?
Absolutely. I mean, that's a really good question. And actually, I do a lot of work with family businesses and their next gens. I mean, I think, whether you are a more progressive organization or a very conservative one, frankly, it all starts with understanding. I think very often, you have this kind of traditional mindset versus new age thinking that continues to clash, but organizations don't really understand, or family businesses don't really understand the importance of actually embracing a new view, of embracing how things are different. I mean, I find myself very often talking to extremely skeptical kind of G1s or older generations. And when you start talking to them and make them realize in a non-defensive way that the world is very different, and it's challenging to be able to stay true to the family legacy while at the same time bring the business into the future. But they also need to understand that the leader that will be required to take the business forward needs to have skill sets and competencies and mindsets that are different than what made the business successful during their times. And then you help them understand why is that the case. You help them understand the reality of their organization. You help them understand how they can actually combine these generational strengths to still be able to bring the business forward. And I had a lot of people that, I know it sounds simple, and then of course there's tons of strategies, there's tons of initiatives, tons of things you can go in and do. But the reality is that what I've seen is a lot of companies, whether family businesses or organizations, that struggle to come up with a perfect program, the perfect initiative, the perfect thing. Let's do bonding within family members, all this stuff, but they fail to actually create that cross-generational awareness throughout the organization. And what I say, it's like trying to save a marriage by telling the couple to go on dates. It may spice things up. It may make things a little more interesting. But if there are deeply rooted problems, unless you sit on that couch and unless you express where you're coming from and why you behave a certain way and why something is important and why your modus operandi is the way it is, you can go on all the dates in the world, but eventually you're going to fall back into the same pattern. So, I mean, in my book, there's a chapter, a couple chapters specifically on family businesses, lots of strategies in there. And I know that you guys sent the 20% discount if you guys are interested in reading it, but I'm also happy to talk to you afterwards. But I would say the first key step is to get those leaders in a room, share insight with them, helping them understand that it doesn't mean they're no longer relevant. It doesn't mean they're obsolete, but that it is important to be able to empower the new generations to come in and take some control, and working together and navigating them to become the best possible leaders they can be is actually a very important job. So, very often family members, they just feel that, I'm obsolete. I'm just giving out the reins and that's it. And should I really trust my business with my kids? And in reality, yes, you should. And there's a lot that you can still do to prepare them. And these conflicts and these frictions definitely are not it. And in fact, that's the reason why many young people decide that they want to start their own thing and move away from the family business.
Yes. I think the ultimate thing that people should kind of understand is you want to leave things for your generation after you to be better than you. And that is a very hard lesson for a lot of people to accept, that
I
you
agree.
need your generation behind you to be better than you. And
You know,
it's a
Obama
fear
said it
and
really well. He was here in Singapore for an event right before COVID, and that's what he said. And you know, and even very inspired people like Kate Robertson from One Young World. She said, you know, the world will be a better place when these young generations take the reins, and you know, and the best we can do is support them. I mean, and that's what kind of drove me to write the book in the first place. Is I came to terms with the fact that my generation won't be the one to save the world, but what we can do, what I can do, is hands in hands with my other generational colleagues, is empower these new generations to drive change and get them ready, because you know, we all have everything to win and nothing to lose by it.
Yeah, I think
Okay, so
in the Malaysian context, I mean, we've just allowed all the young ones to vote at 18. You know, I mean, which is already a little bit late to do it. But we are all hoping that they will, you know, a lot of new leaders will come out and also help transform us. You know, I mean, new ideas, new ways of doing things, new perspectives, and so on and so forth. I mean, that's our hope anyway.
For sure. And with that, we've come to the end of the session. I am so sorry we couldn't get to everybody's questions, but if you have any more questions for any of our speakers, you can email it to vivian@icdm.com.my and we'll try and get them to them. And with that, before we wrap up, can everybody pose, because we're going to go take a picture? Are we ready to take a picture?
Yes, everyone's ready.
Okay, all right.
On the count of 3. Hold on. 1, 2, 3, smile. Okay, another one. 1, 2, 3, smile. Okay, thank you.
Thank you so much. And please virtually thank Rakele, Anwar, and Jeff for their wonderful presentation and all the insights this morning. And thank you everybody for attending and your wonderful questions. We definitely like to hear from you. Please drop feedback in the chat box, or you have any questions about any of the programs. Like I said, if you have any for the speakers, vivian@icdm.com.my. Now, not only on today's PowerTalk, but on ICDM's various programs, if you have any kind of questions, please drop us as well. There are a couple of, please take a look around the website. There's a whole range of programs that ICDM offers. There's the mandatory accreditation program, which is designed to formally onboard new directors, give them a sort of, insight into becoming a new board member. And that is going to be a great program that allows you sort of a glimpse. And with that, we've come to the end of our webinar for today. Thank you everybody for your participation and questions. We hope you can join us tomorrow for the topic, Demystifying Investors' ESG Expectations, the Do's and the Don'ts. That's it for this session today. It's been my pleasure to be your moderator. Everyone, stay safe.